In the SME space, there's some debate about whether there's any lack of service from the pillar banks, and I think we conclude there isn't any lack of service from the pillar banks, but there is still a desire in SMEs for a more high-touch service model and a very responsive service model, which is something that a small bank like Attica can respond to. So I think that's one key point. And another thing we talked about was the risks around this plan. They're going to deliver a lot of growth in a short space of time, and that means that they need to be very careful about the credit they give out, but they're well aware of that. I specialize in risk, and so I usually see the downside in everything, but actually I'm quite positive about the future for Greece and the fact that the investment grade upgrade will be maintained, because we in Greece have a pretty strong outlook for growth. There's still plenty of catch up to the rest of Europe. And the debt is on a very sustainable path, at least for the next 5+ years when it's got a reduced service load. So I'm quite optimistic about that. But nevertheless, I think that what is important is that growth in the Greek economy at the moment is a bit too concentrated. So there's a small number of very large companies that are doing most of the investment, the renewables, and the major projects, the concessions, and so on and so forth. And what would be great to see would be this growth spreading out a little bit more. And so that's what I would wish for going forward. In the retail sector, I'd love to see more investment in housing. I'd love to see personal balance sheets recovering more from the crisis. And in the corporate space, I'd like to see growth spreading out from the large companies down.